Vice President Kamala Harris has introduced a sweeping housing plan as a cornerstone of her presidential campaign. The proposal includes $25,000 in down payment assistance for first-time homebuyers and a commitment to constructing 3 million new housing units. Harris aims to address the severe housing shortage and combat high prices by cutting red tape and incentivizing builders. This move reflects the growing importance of housing affordability in the 2024 presidential race as the issue becomes a pivotal point for voters across the nation. The commercial real estate sector, especially office spaces, is grappling with significant difficulties due to persistently high vacancy rates. The shift to remote work has left many office buildings underutilized, with Class B and C properties being hit the hardest. Experts predict a continued decline in office space demand, leading to distressed sales at deep discounts. This sector's future hinges on potential interest rate cuts, which might stimulate investment but are unlikely to revive the struggling market. As the summer housing market cools, autumn 2024 is expected to bring slight changes. Mortgage rates are anticipated to drop to around 6.3% by year's end, which could boost buyer activity despite ongoing affordability challenges. The market may see a shift in dynamics as families relocate for the school year and prepare for the holiday season. While prices may stabilize, inventory shortages remain a concern, continuing to impact buyer and seller behavior in the coming months. The Federal Reserve's decision to maintain high interest rates throughout 2024 is having a profound impact on real estate markets. The elevated rates are slowing down transaction volumes and making it difficult for potential buyers to afford homes. Analysts suggest that while some rate cuts might occur later in the year, the real estate sector will need to adjust to a new normal of higher borrowing costs, which could continue to suppress market activity well into the future. Ongoing legal challenges, such as the Sitzer-Burnett case, are threatening to disrupt the real estate industry's long-standing commission practices. These lawsuits could lead to significant changes in how agents are compensated, potentially lowering commission rates and altering the dynamics of buying and selling homes. The uncertainty surrounding these legal battles is creating tension within the industry, as stakeholders await the outcomes that could reshape the real estate landscape. If you found this information helpful, please like and subscribe for more updates on real estate trends and news. Regional shifts in the housing market are becoming more pronounced, with areas in the Midwest and East Coast seeing increased demand. Cities like Columbus, Ohio, and regions in Massachusetts are becoming attractive alternatives due to their affordability and quality of life. As buyers move away from overpriced markets in the West, these regions are experiencing a surge in activity, which could lead to price increases and greater competition for available homes. Despite some predictions of market stabilization, the ongoing shortage of housing inventory remains a significant challenge. The lack of available homes, coupled with high mortgage rates, is keeping prices elevated and limiting options for buyers. This inventory crunch is particularly pronounced in popular metropolitan areas where demand continues to outstrip supply, further exacerbating affordability issues. Corporate landlords are facing increased scrutiny over their role in driving up rental prices. Accusations have surfaced that these landlords are using algorithms to set artificially high rents, contributing to the broader affordability crisis. This practice has drawn criticism from political leaders, including Kamala Harris, who has vowed to crack down on corporate rent-setting practices as part of her broader housing reform agenda. The autumn season traditionally marks a shift in the real estate market, with changes driven by factors like the start of the school year and preparations for the holiday season. This year, the market is expected to cool slightly after the summer peak, offering potential opportunities for buyers. However, ongoing economic uncertainty and high mortgage rates may temper these seasonal effects, leading to a more subdued market compared to previous years. While the US economy has avoided a recession, the real estate market remains uncertain. The ongoing effects of high inflation, coupled with the Federal Reserve's cautious approach to interest rate cuts, create a challenging environment for real estate transactions. Experts predict that the market will remain volatile, with potential rate cuts later in the year offering only limited relief to buyers and sellers alike.